Hi everyone, my name is Eddy, CEO of Haven. Today I'll be starting a new video series whereby I'll be answering the common questions people have on insurance. Okay, let's begin with the first question. Does insurance always have to be expensive? Well, not necessary. If planned thoughtfully, insurance can be cheaper than you think. Typically, you can be sufficiently covered with less than 10% of your income. By sufficient, I mean having your key potential areas covered with the right amount and duration and using the right plans. But why would insurance be more expensive? There are two common pitfalls. Firstly, when people buy more than what they need. So for example, for young working adults, the needful coverage is from now until age 60 or 65. Instead of getting a term, they buy a whole life plan, which costs much more expensive, a few times more expensive than a term plan. Second pitfall is where you mix insurance with investments. For example, investment-linked policies or ILP. Not only do you have to pay a lot more for the coverage, but the money gets locked up such that if you surrender the policies, there is huge penalty imposed. So how do you get sufficiently covered yet keeping the cost within 10% of your income? Well, the way to go is to go for term plans. Because for young working adults, the most important coverage is to cover over the working years, and a term plan covering from now until 60, 65 would suffice. This will not only make it more affordable because term plans are cheaper. Term plan is also important because for most people, men on the street especially, this is the only way you can be fully covered at the lowest cost. So the key principle is this: buy as much as you need and pay as little as possible. This way, when life crisis happens, you are fully covered without paying high premiums that could otherwise affect your current lifestyle to enjoy or hurting your retirement plans. Let's go to question 2. If I never make a claim, is insurance just a waste of money? The idea that insurance is a waste of money if you don't make a claim misses the whole purpose of insurance. The thing is, you never know if you really need insurance. If you can look into the future, then insurance is meaningless because no insurance company will offer coverage if they are certain that you will make a claim. Likewise, if you can look into the future, lottery is meaningless, then everybody can be a millionaire. But because life is unpredictable, therefore you need life insurance. It's not uncommon to see very healthy people succumb to illnesses or suddenly pass away. And that's because life is unpredictable, and therefore we need that safety net from insurance to provide when unexpected life crisis happens. What is the true value of insurance, you say? Well, if you make a claim, then insurance provides a lump sum that you need to provide for your loved ones to tide through. But if you don't make a claim, then the benefits of insurance is that it provides the peace of mind, knowing that if life crisis were to throw a curveball, you are fully well protected. That is also why you should not overpay for insurance. Buy what is necessary and keep within 10% of your income. Question 3. Could I be missing out on better options or benefits by not reviewing my insurance? Is it really necessary to do it every year? Or does it make more sense to review only after major life changes like marriage, a newborn, or other significant events? This is a common question, and the answer is yes. Your insurance needs as well as products actually evolves over the years, and it's important to review so that your plans and protections stay relevant to your needs. Insurance policies has evolved over the years. For example, critical illness. In the past, it covers 30 critical illness definitions. It has evolved to 37 critical illness with better coverage, and now there are critical illness plans that offers early stage and multiple payment critical illness to suit consumers' needs. So it's important to make sure that your protection stays current and relevant. Your needs also evolve as you move across different life stages. For example, hospitalization plans, which is critical for newborns, will shift to income replacement as you enter the workforce and long-term care as you retire. So how often do you need to review your insurance policies? Well, if you have done a thorough insurance policies review in the past and there's no gap, then you don't need to do every year. It probably makes sense to do a review during major life events. For example, getting married or starting a family, birth or adoption of a child, divorce, buying a home or taking new financial commitments, a change in health, change your employment status, and approaching retirement. So yes, you need to review your insurance periodically, especially during major life changes, so that your insurance coverage remains relevant to your needs. Let's move to the next question. If I have multiple insurance policies, are they working together efficiently? Just because you have multiple insurance policies doesn't mean that you are sufficiently covered. Sometimes there could be duplicates in your insurance coverage. For example, having multiple personal accident plans or insurance riders that you do not need. When you do that, you're actually paying a lot more for what you do not need. How do you figure out if your insurance policies are doing their job well together? Well, a good idea is to sit down with a trusted advisor or insurance specialist to work through your insurance plans. They will be able to analyze your plans, review your insurance policies, spot any duplicates, and propose recommendations to cover the gaps so that your plans works together. It's all about making sure your insurance works smarter for you and not just buying more plans. Okay, question 5. Can my insurance strategy be tailored for a DINK lifestyle? Dual income, high mobility, and future focused. Technically, since I have no dependents, should I be buying a lower amount of coverage? It definitely makes sense to tailor your insurance program to your life stages. For example, DINK, dual income, no kids, especially if you are highly mobile and focused on future flexibility. Well, since you don't have any dependents, you do not need life insurance or death coverage compared to someone with dependents or having a family. Instead, your focus should shift to living benefits. So what are these living benefits? There are 3 I'll list down. Firstly, critical illness. This provides a lump sum to allow you to stop work, having a career break in the event of medical crisis to support your recuperation process. Number 2, disability income insurance. This provides or replaces your income in the event you're unable to work due to injury or illness, which is very important. And thirdly, a comprehensive medical insurance. This allows you to have quality healthcare wherever you need, especially if you are highly mobile and you move from places to places. Ultimately, the right amount of insurance or right type of insurance depends on your goals and your assets and your financial commitments, and it's not just a simple formula. Next question. Can I buy more long-term care insurance to cover critical illness needs? It's not a good idea to buy long-term care to replace critical illness coverage because they are different products serving different needs. I've done a video on this. You can go to the description below to find the link. Here's why they are different. Critical illness plan basically pays a lump sum if one is diagnosed with one of the 30 or 37 critical illness definitions. For example, cancer, heart attack, or stroke. When that happens, the critical illness insurance policies pay a lump sum, and this amount allows the person to take career breaks while recuperating from the illness. For long-term care coverage, basically it provides a monthly payout in the event one is unable to perform activities of daily living. So that means, for example, eating, bathing, toileting. Critical illness, on one hand, is about the illness coverage. Long-term care, on the other hand, is about the inability to function on its own. And therefore, the payout of long-term care is to support the caregiving needs of that person. So these serve very different needs. If you buy long-term care to cover critical illness, it's like comparing apple to oranges. They are made differently, they serve different needs. Instead, you should be buying the right plans to meet the needs that you require, be it long-term care or critical illness. In that way, you will be more comprehensively covered. Next question. If I can only afford one insurance policy right now, what makes the most sense to start with? Okay, this is not a straightforward question to answer because everybody's situations, financial commitments are all different. But if you ask me, the most important plans you should start with is term life insurance policies. Why is that so? Because term life insurance policy gives you the highest coverage at the lowest cost and protects your most important needs, which is income replacement for your loved ones should you no longer be around. Once you have this foundation coverage put in place, the next thing would be your living benefits, critical illness, and health benefits when your budget allows. But term insurance is a practical and affordable way for most people to start with their first plan. Next question. Of the 5 core areas covered in your Insure Well ebook, which one is the least important? Thank you for the question. I think this is a very good question. Honestly, I feel that the 5 core areas are very important because it covers various aspects of your insurance needs if you really want to have a comprehensive coverage. And the 5 core areas are namely death, critical illness, disability income, long-term care, hospitalization insurance. How to assess whether which one is more important than the others? I think this is where you need to talk to a trusted insurance specialist or someone from Haven, whereby they will be able to look at your unique circumstances, identify what are your financial obligations, your key insurance goals, and then advise you which are the more important ones that suits your budgets, and then what are the areas whereby you can consider later if your budget allows. Question 9. I get conflicting advice from different financial advisors. Why is getting a proper insurance review so difficult? And how do I know who is right and who to listen to? Okay, this is a very common frustration. I think many people get different advice from different advisors, and it's really hard to tell who gives better advice. One reason for this conflicting advice is that every advisors have their own personal insurance philosophy. Some prioritize on cost, some on certain products, or some focus on which products gives the highest commissions when they sell them. Therefore, it's very important to make sure that the recommendations actually serves your needs. One of the ways to find out whether the advisors is giving the advice that suits your needs is to ask 2 questions. One is to find out what is their insurance philosophy. How do they treat insurance, the role of insurance in their financial plan? And secondly, how do they mitigate the sales conflict that is so common in insurance industry? It is important to have a good answer to these 2 things, a clear insurance philosophy as well as how to mitigate sales conflict. Never be afraid to ask the advisors these questions. In fact, sometimes I'll recommend that you should seek out second or third opinion if that matters to you. At Haven, we are very particular in addressing these 2 areas. Our philosophy, first of all, are clear and is publicly available, and we put it through our ebook. And secondly, we put in rigorous control measures to make sure that we mitigate the sales conflict to put clients' interest first. Ultimately, you deserve the best advice because what matters to you is that the insurance recommendation must meet your needs. This is the last question. And the question is, I have an existing policies that my parents bought for me when I was younger. Do I keep it or should I cancel it? Great question, and it's quite common. But first of all, I think it's important to thank your parents for thinking ahead of getting insurance for you at a very young age. However, it's important to review these old insurance policies. As I mentioned, insurance products has evolved over the years. Insurance products that were offered in those days may not be relevant or keep up to current plans. But before you go ahead to surrender them or keep it blindly, you should talk to trusted advisors and find out a few things. Firstly, find out what are these plans, what do they cover, and how does it compare with current plans that's available in the market. Are they still relevant? And thirdly, to find out the plans that you bought, is it still be able to fit your needs, or is there any gaps going forward? So important to review them and from there decide whether what you should do with this plan, whether to keep it or to replace it. One way you can consider is to give us a call at Haven. Haven will be able to provide guidance to review the policies, review your needs, and then make the rightful recommendations where you should keep it or to get better plans to supplement it. So with that, we come to the end of the first Q&A session. If you still have any burning questions that are not managed to answer, feel free to drop us a comment below and we answer as fast as we can. Do stay tuned for our next session. Bye.